Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another velocity banking review. But before we get started, I wanted to review this awesome quote from Dune, which is the cash must flow. I don't know if you ever heard of Dune, but that was a deep quote that was symbolism for velocity banking. No, I'm just kidding. There was no such quote. In fact, I actually don't like Dune. I think it's a really long book. I don't think I've ever read it, but I saw the first movie or part one, and to be honest, I was bored out of my mind. That's why I didn't want to watch part two. Maybe I should watch part two, but when I watched part one, I was like, "What is going on?" Just like a bunch of scenes, but with no narrative flow. But I think this is just an excuse for me to troll all of you. But it would be cool if instead of saying the spice must flow, it was written in the book that the cash must flow. And do I sound better to y'all? Because I actually bought a new microphone today. I did a Google search, best podcast or streaming microphone, and it gave me this one. So I just got it delivered. So hopefully I sound much better today than I did previous days with my new professional mic. I'm being a little bit more professional now. Who knows? I may have editing in the future. Okay. So we're just going to do another velocity banking review for today. Sorry, folks, there is no quote from the movie Dune. I was just trolling you all. But what if there were? That would be awesome, right? What if there were? So we'll just do another review of the same topic from the last video, right? As you can see, I'm just kind of erasing my work, and that's kind of how we get better, right? Especially when we do like math problems, Excel problems, just do it over and over again, and then you'll get really, really good. So, what is velocity banking? All it is a debt payoff strategy using a line of credit as your main operating account. So, what's a line of credit? All it is a financial tool where you could borrow money, pay it back, and then use it over and over again. Okay. So, we just need two things. Number one is a budget, which we have, and number two is a line of credit as our main operating account. So what's really important when we do our budget is that we list our income, we do a sum total of our expenses, and then when we do an expense breakdown, we have to list every single debt that we have, right? We look at all these debt, and then at the end, you can list all your non-debt items. You can either combine them to give a general number, food, gas, insurance, etc. And yeah, and that's pretty much step one. See how easy that is? So anything that's not a debt, you just put in here, or you could separate them. And then here is all of our debts, right? And the whole goal is to get rid of debt with the help of a line of credit. All right, so now we're just gonna do a repeat of the same situation as last time, where we have really good income. And you want to know something about people who make a good income or more than six figures? 50% of them live paycheck to paycheck. 50%. I don't know if you knew this or not, but when you make more income, you notice that you get more offers in the mail for loans and credit cards because banks like to lend to you when you have money. And then their hope is that once you take out the loans and the credit cards, you just never pay them back quickly, right? You pay them back really slowly. And if we're up to the bank, you'd just be making minimum payments on everything, right? And so what we're going to do is make maximum payments with the help of a line of credit. Okay. So let me just go ahead and copy and paste this. And then we're going to do the same expenses, but take a look here, negative $284 in savings. And so instead of this negative savings number or a positive savings number, we're going to do something a little bit taboo and have no savings. Okay. You know what's crazy is that sometimes you tell other people that you don't have any savings and they freak out even though they themselves are broke. You ever notice that? So what we're going to do is we're going to have something called cash flow, but we don't need savings, okay? Because we're going to dump our entire paycheck into that line of credit, all right? And so what's a line of credit? Well, I just kind of said it, but there's different types of lines of credit. There's credit cards, there's personal lines, there's home equity lines of credit, and I got all of them. In fact, right now I have over $575,000 in lines of credit. Literally, if I go into the bank's websites, all the sum total goes to 575,000. So I have an insane amount of line of credit. Those aren't loans; it's lines of credit. In fact, this is my home equity line of credit. Right, I can borrow $280,000. I literally click a button in the bank's website. $280,000. Isn't that awesome? And then yeah, that's $280,000. 280,000. So this is pretty awesome. right? In fact, one person I know didn't even know, like, has been owning homes for more than 15 years since the late 2000 and didn't even know that this even existed. Some of you probably are watching this for the first time and thinking, what? What? You can get a $280,000 credit card like financial instrument and you just go to the bank's website and click a button and withdraw that cash? Yep, you can. 8% interest rate. In fact, actually, it's 7.75 for me. It's crazy, right? So let's just do this. Assume we have a $150,000 home equity line of credit. Now, here's the unrealistic part, right? When you're in negative savings, no bank is going to issue a home equity line of credit because you need money, and banks don't lend money to people who need it. Their whole goal is to get you in a state where they lend money to you when you don't need it, and then eventually you mismanage your money to the point where you're just making minimum payments on everything. That's kind of like the bank's plan, right? Think about, like, from the bank's point of view, how am I going to make money off of this person? We can't make money off of people who need money because they're too much of a risk, right? So just be aware of that. Okay. So what we're going to do, but we're just going to assume that we do have a line of credit available. I actually did a live stream a while back of someone who had a line of credit, was maxed out. But the thing about people with lines of credit, if they don't know velocity banking, is they just treat it like another credit card. And so it just becomes maxed out, right? Not 1.5 million, my bad. So it just becomes maxed out, right? And so whether it's maxed out or not, the idea is still the same. But if you're interested in a more advanced version, I would go ahead and click the YouTube channel join link. 99 cents, you get exclusive access to those live streams. Okay, so now this is what we're gonna do. We're gonna move these 9 credit cards, okay, into that line of credit. And so when we do that, this is about, how much is this? I think I summed it up before. $149,000 in lines of credit. So let's go ahead and do this. 149, whoopsie, 149,000. And when we move that line of credit, guess what happens to these payments? 0, 9 credit cards. And now look at this. Our cash flow goes to $4,476.45. How is that possible? It's when we don't have any savings and we're dumping all of our money into debt. That's possible. And I practice what I preach. I mean, take a look at one of my checking account statements here. It starts at 0, ends at 0. You don't have to follow what I say. I'm just telling you what I do as an example, right? And then what we're going to do is put our entire paycheck, our entire $10,000 as an overpayment in a line of credit. Doesn't matter whether you get paid monthly, weekly, bi-weekly. As soon as it hits your checking account, it just leaves your checking account into the line of credit. Does 2 things. It satisfies a minimum monthly payment, and then it lowers that, what you call the average daily balance. Therefore, you're accruing less interest. Okay, so we put our paycheck in, we pull out the money from the line of credit, and then after every single month, the balance is going to go down by $4,476.45. And if we were here at negative $284, whoa, that's a bad deal, because the bank's going to charge us overdraft fees, right? So we certainly don't want to be here. Okay, so let's go ahead and do that. So I2 equals I2, whoopsie, I2 plus 1. And then get the next month's balance. It's the previous month's balance plus the previous month's interest minus whatever the cash flow is, 4476.45, right? And then what we do is we take the average daily balance, we multiply it by the interest rate, so that's 0.08, and then divide by 12, right? And so what we're going to do is copy and paste, copy and paste, copy and paste, right? And then now we're going to do this, and then, whoa, in 38 months, we're rocking, right? Our cash is flowing from day one. When we're here, we were in the negative. When we're here, our cash is actually flowing. So the cash must flow. Not from Dune, but I'll just pretend that it is, okay? And so now, this is what we're gonna do, okay? So this is, we're gonna write the milestones. So at month 38, we are good, okay? So month 38, 38 months, we paid off $149,000 of debt, okay? $149,000. And then now we have these rest of the loans, 2 auto, 1 student, and 1 mortgage, right? And let me just go to the loan calculator right here. So let me do this and reset what we did last time. Okay. So the cool thing about this loan calculator is that it tells you what the current balance is. So if you have debt and you want to know, like, after X number of months, what the current balance is, and also auto calculate the payment amount, there's functions in Excel that will do that for you. You see that right here? They will all do that for you. So what you got to do is just put in the current month, which I think was month 38. So 38, 38, 38, 38, right? And then you see right here, okay, so this is G2 plus G3, right? What we're going to do is move these two auto loans. I'm going to show you right here. These two auto loans. Oh, what happened to this? Okay. Into that line of credit because we immediately get cash flow, right? So we get about $1,600 in cash flow. So let's move the 35 grand into the line of credit to get about 1,600 in cash flow. And then let's go ahead and do that right here. Wablam, Control V, copy, paste, and then this is plus 35032.18. Okay. And then once we do that, okay, guess what happens to these two auto loans? 0, 0, right? And so our cash flow is flowing at $6,000 a month. So let's go ahead and do this and copy and paste and then update our new cash flow, which is 6067.61. And then let's just keep going and going. All right. And so we see at 43 months, we paid it all off. Okay. So at 43 months, we paid off everything. So 149 plus 45 plus 42, which is 236K. So 236K. And so, okay, we go here, 55,000 at 43 months. What is the balance? Let's do this, 43, 43, 43, okay? So again, I won't go too much into the cash flow indexes, but anything above 100, you don't want to put into a line of credit. Anything below 50, I think is a good candidate. This one's 60. Not feeling too good about that. I would use a chunky method. It's okay. Let's just do it just to kind of get it over with, because I don't want to go too much into detail of how I would do this. But again, even if we move this line of credit here, not line of credit, this loan here, plus 39002.53, what's our cash flow? Well, our cash flow is, this is 0, okay, is now $6,680.99. And all right, so do copy and paste, whoopsie, values. And then now I got to update our cash flow, 6680.99. All right. And so now what we do is we copy and paste, and wablam, month 50, it's over. It's over. Whoa, all right, 50 months. And then so now it's 236 plus 55, which is 291K. All right, so now, okay, so 220,000 is the, what's it called? Is the original balance of the loan. So let me go here and just type in. So this is now 000 at 50 months. What's the balance? 207,000. So we barely chipped off the loan, which is what the bank wants, right? So 220 is the original balance. The current balance is 207. So in 50 months, we paid off 220 minus 207. We paid off 13K of debt. It's not that much, right? But guess what happens when we move this 13K of debt into a line of credit, which I'm going to do right now, right? So plus 13000, right? Whoa, look at that. We paid it off in 2 months. 1, 2. Isn't that crazy? So let me go back here. So in 2 months with the line of credit, we paid it off in 13. Okay. So The tricky thing about calculating the debt payoff for this is that we're still making the monthly payment because the monthly payment only goes away when you erase the entire loan or move the entire loan to a line of credit, but it has to be worth it in terms of cash flow to do that. So as an alternative, an easy way is just to do small chunks, and then you save a a good a ton of interest without segregating your income. Without segregating your income. If you don't know what that means, just type in segregation of income in this YouTube channel. But give me one moment to open the velocity banking calculator. Whoa, take a look at this awesome velocity banking calculator for Renatus. So this is where I originally learned velocity banking from. If you're interested in learning about not only velocity banking, but financial literacy and real estate investing, click the Google form link below. This is where I learned how to get a property at $100,000 discount. I'm not going to go into it too much, but just a quick plug. I promote Renatus kind of as, I don't want to say side hustle, but because I learned so much from them, and because I'm what they call an independent contracted marketer. If you decide to purchase from me, I do get a commission for the sales of their product if you're interested. So take a look here. I just got to put in the information here and look at that 2.4 years. That is insane. That's what happens when this number is so much bigger than this number and the cash does flow. Whoa, that's amazing. Okay. So now all we got to do is just do this 50 divided by 12 plus 2.4, and that is 6.56 years. We are completely debt free, and our cash is really, really flowing, right? It's really flowing. 8,000. When you have $8,000 a month and you're completely debt free, man, the cash is really flowing. It must flow, right? They got to take out the quote from the I heard that quote wasn't even in the book. It was like from the original first movie that they made, The Spice Must Flow, but they got to redub it. Instead of saying the spice must flow, the cash must flow, right? Okay, I'm just kidding, y'all. Maybe one day I will watch Dune Part 2, but I remember when I watched Part 1, I was like so bored. I was like, whatever. All right. Well, just another excuse to do velocity banking and troll you all a little bit. All right. Well, this is Korean Atlanta Mentorship. Have a great day, and we will speak next time.